All right, guys, you've been watching the news. You see the Fed is starting to move the rates. Inflation feels like it's coming in. What does this mean for the housing market in the future? Stick around. We're going to talk about that today. Hey everybody, welcome back to the channel. It is your realtor Nick Isgro with eXp Realty here in Central Maine. As you know, on this channel, we talk about all things real estate here in the state of Maine, particularly in the Central Maine market. If that's of interest to you, please go ahead and like this video, hit the subscribe button, knock that little alarm bell, and you will be notified every time we put out new videos. Now, it is impossible to look anywhere without seeing the headlines about rising prices, whether it's gas, food, heating oil, it's all coming to head. Feels like inflation might be setting in, but we don't really know what the long-term effects are. Today, we're going to go through all of those things and then wrap it up at the end of what my personal opinion is on where we will be heading in the year 2022. So what's been going on in the market? Well, essentially, inflation is happening and everybody sees it, but the Fed has been doing absolutely nothing about it. So that's caused a little bit of a panic, which has caused the rates to start to go up a little bit. Not only that, but the Fed is now signaling that they might perhaps start tapering off their constant purchase of mortgage-backed securities, which have been one of the long-term rate stabilization mechanisms that they've been using. So we've seen that little bit of a rate hike. We know there's a little bit of inflation going on. What's happening in the local market? Well, as we saw when we did the market summary at the beginning of this month, just a couple of weeks ago, there's really not much happening that's out of the ordinary right now. Sales were up, inventory was slightly down, and we know that even with the increased sales, that the houses are sitting on the market just a little bit longer than they were before, but seasonally speaking, it was right in line with where we were last year, and actually still with shorter market times than we saw a year ago, so we still had a very fast-paced market comparatively and a very high-priced market comparatively to a year ago. So what happens if rates go higher? Well, let's talk about that. I think one of the first things that we're going to see if rates do start to go up a little bit is that all of that refi that's been happening is probably going to taper off. I think we're probably about at the end of that anyway. I mean, after the last several years, who in their right mind who could have refinanced their home wouldn't have refinanced their home? But I think where this really will have an impact is on those second home purchases, the vacation homes, some of the lakefront property perhaps, and also the just outright investment properties. If you think about it, a lot of people who have been able to refinance at these super low rates have been tapping cash on their primary home in order to fund some of these second home purchases, some of the investment property purchases. And if you're sitting at home and you're thinking about tapping into your home, but the rates are going up, you're probably going to hold tight, so that could back off some of that. We also know in the last couple of months that Zillow has stopped purchasing homes. That's going to make an impact in the market as well, although they did cite not interest rates, but the lack of people willing to work in this market in their decision to do that. Either way, this could open up a little bit more inventory for the buyers. All of that said, if you are a buyer in the current market, there's a good chance that with these low rates that we have right now, you're already looking at the top of your bracket. So if rates go up, that could actually scale back your ability to purchase, your power to purchase, unless the pricing goes down. Now, let's say rates do go up a bit and we do see some buyers pulling back. What is that going to do for the market? It's actually going to increase inventory, which as a realtor, I can tell you would be an incredibly welcome thing because that would bring with it some market stabilization. Over this last year, we saw somewhere around about 10% appreciation on home prices. Goldman Sachs estimating next year around 16%. Zillow estimating around 12% appreciation on home prices. This is simply unsustainable in the long term. So if there were a tiny bit of a market slowdown and we could get to maybe 3 to 5% appreciation in that normal range of home appreciation, that would actually be a great thing for the market. It would be good for sellers, good for buyers. It works for everybody because it brings some predictability and stabilization back to your choices and decision making in the market. Now, while I think any kind of massive pullback on price is probably unlikely, if it does, it would mean all of those buyers who have been sitting on the sidelines would actually jump into the market now. So you're going to have basically a flip-flop of buyers where you might have some at the top of the bracket pulling out, then you have people on the bottom who have been waiting to get in the market, but now there's more inventory, more supply. They might start to jump back in the market if there was a little bit of a pullback on the price. Now, before I get you too excited on the idea of a big pullback in pricing on the home market, I think it's important to note that it would take a dramatic increase in inventory to have any kind of substantial impact in the overall pricing on the market. So I don't think we're going to see prices drop by that much if they do pull back at all. In fact, If rates go up and you have a little bit of a pullback on the buyers, you're actually going to have a pullback on the sellers too. And here's why. Most people who are out buying homes, a lot of times they are people who are looking for their second or third home. They've been a homeowner for a while. Well, if you're a homeowner right now and you're sitting at home, you're comfortable where you live, you've got your mortgage rate locked in at these historic low rates that they've been at, if rates start to go up, you're probably not going to swap for less house that's less affordable or with a higher payment because the interest rates are higher. So you're going to probably sit it out for a little bit and wait for that market to turn around. So those people who have been thinking about selling may actually hold back on selling. So again, I don't think we're going to see any kind of massive change as far as supply and demand, regardless of whether these rates go a little bit up or not. Here's another thing to consider. A balanced market is considered something that has roughly about 6 months of house supply on the market. If you remember at our last month's check-in, we had only about 2.5 months worth of supply here in the market. And that's not just here in Maine, that's really the average nationwide. So we could more than double the amount of current supply only to get us to a stable market, or what we consider a normalized housing market. In order to have the kind of supply that would drastically impact pricing or have some kind of major impact on the market, you're talking about tripling or quadrupling the amount of inventory on the market, and it's just highly unlikely to happen right now. So where do we think we're going over the next year? Well, if you know the term, trends are your friend, the reality is that interest rates have been steadily declining or on a decreasing trend for the last 40 years or so. There are even some experts saying that overall over the next year or next 2 years, we're likely to see even lower rates than what we've been used to. My personal opinion is while we might see these slight little upticks here and there, 0.5%, less than 0.5%, I don't think we're going to see any kind of major shift. I think we're probably likely to stabilize around where we are, and we're going to continue to see this low rate environment. Caveat here is we have to watch inflation, because the big key to all of this is how does the Fed finally deal with inflationary prices? What are they doing to counter any major market inflation? That's the thing to watch. Now, if you're out there and you're buying right now and you're asking yourself, gee, should I wait? What's going on? I have an opportunity to lock a rate. Get the rate locked now. Follow through with what you're doing. I mean, really the reality is these are incredible rates. And if you're already in the market and you're looking to buy, there's no reason why you shouldn't lock in now while you know the rates are low. If you are in the market, whether you're thinking about selling your home or if you're in the process of buying, let me know in the comments down below what it is that you're seeing out there, if there's things that you're hearing or seeing that are different than what's happening here, or if you just have any thoughts or comments, would love to hear from you and get that engagement going, so please do comment below. Again, everybody, my name is Nick Isgro with eXp Realty here in Central Maine. Would love to hear from you sometime. I appreciate you so much for watching these videos. I hope they are of value to you. I'm looking forward to seeing you next week.